You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little show we like to call around these parts the option block. A little bit of options wit, some wisdom, some analysis, a whole bunch of earnings, activity breakdowns and straddles and unusual activity, your questions, some strategy block, all kinds of fun stuff. Stir it all together in the pot, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few outlets for you guys to get there. Good stuff, of course, the easiest place. The mothership, theoptionsinsider.com, got all the breaking news there, as well as the radio, as well as our articles and education and all that fun stuff. Head on over there. You'll be set for hours, if not days, I guarantee you. And, of course, you can always find us if you just want to mainline the audio into your ear holes, iTunes, TuneIn, Stitcher, all that good stuff. You can subscribe to this show individually, just the option block, or get the whole kit and caboodle, all 15 shows. Just subscribe to the network then. Warning, though, it's a lot of content, but if you're up for it, if you want some good options info in your ear holes every day, sometimes multiple times a day, go for it. Take down the whole network. I think you're going to like it. And, of course, however you listen, including those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixler. Make sure you hit us up. Questions, comments, insights, hilarities, pearls of wisdom, all that fun stuff. We'd love to hear from you guys. And joining me on the program today, going to have some fun on the show, I think, today. Starting off, let's go in order. Already tweeting about it. I love it. Let's go in order, I believe. I'm not sure which one's farther, St. Charles or Riverside. Let's just go to St. Charles, because I know where that one is. And that's the home of Skippy's delicious gyros and lemonade, as well as good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always good to be here. And, I don't know, because there's also a Skippy's in South Elgin, Illinois. I'm not sure where the main one, which one the main one is. They're both delicious, as you say, but I don't know if it's a South Elgin thing that went to St. Charles or vice versa.
I think we shall never know. It is lost to the history, the sands of time, sir. And also joining us, I believe, from scenic and lovely Riverside, Illinois, by a cohort this time of co-hosts, starting off with our usual suspect, the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. How you doing today, sir?
I'm doing great. Let me be clear here. There is, in proximity terms, Riverside is much closer than St. Charles.
Yes, it is.
It's like 32 miles closer.
For us downtowners, once you get outside the range of the L, it's all lost to the ether out there. It's all the suburbs. They all kind of equate together. But you may have heard another voice in the background there, listeners. We are joined by a newcomer to the old Option Block program. Hopefully we'll get him on more frequently, but he's been around the space for quite some time. Mr. Matt Benson, a.k.a. Tubby. He was a floor broker on the CBOE for a number of years. Now he's kind of an options man about town. Mr. Tubby, a.k.a. Matt, welcome to the Option Block program, sir.
Quite an introduction. I was hoping for some music as well. Thank you, Mark. Looking forward to listening in.
Well, we want you to do more listening. We want you to talk a little bit, too. Why don't you, I kind of gave a quick synopsis of your background. Why don't you go ahead and give our listeners a little bit of an overview of your background in the options market and what the heck you were doing down the CBOE for all those years?
Well, I started in 1991, did all the running activities that people would do back in the day when they had runners. I worked my way up through the ranks and traded for a couple of years in Micron Technologies and a few other little smaller stocks, Quest Communications and a couple others. And took up brokerage in 1997. I've had the same phone number up until June 30th anyway, with Bob Sheehan, which was taken over by Bellsberg, which was taken over by Liquid Point, which was taken over by ConvergeX, which was taken over by Dash. And as of June 30th, I decided to walk away from the floor after 26 years and look at some new opportunities and see what's out there.
Any inklings of what that might be? You gonna stay in the options realm, hopefully, or are you looking at other stuff? What's the plan, sir?
Probably options based, but potentially just in buy side type management of some sort.
There you go. Good stuff. Well, Tubby's gonna be joining us for the whole show. So without further ado, let's get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was moving, what was shaking, what was lighting it up in today's market activity. A bit of a quiet one to end the day here. Most of the major indices, we have a bit of a range, but settling out pretty much unched at the end of the day. Maybe everyone waiting for the after hours where we got some big names popping off in a little bit. S&P pretty much unched to end the session. NASDAQ and the Dow pretty much following suit. And despite a little bit of back and forth, VIX Cash also closing the day off about a quarter of a handle, hovering right around these near, dare I say it, near historic lows there, right around 9.5 again. So we're flirting with some impressive downside levels. Perhaps we'll start there, Mr. Meatball. I'm sure people have been hitting you up in your chat room and others saying, well, what's with this historic, quote unquote, levels of VIX and what are we seeing out there? So maybe we'll start there. What's catching your eye there, as well as what else caught your eye in today's activity?
Yeah, there it is, historic low levels of VIX, but it's not like the market is flying around up and down. How long has it been since we had a true 1% move where in the overall market? What are the things that are really would make us want to go long volatility and be really afraid? What type of action have we seen in the S&P other than straight up? And the answer is none. We realize volatility is up from where it was last month, and it is all the way up to 7.5, and that's 20-day. 10-day is about to collapse back toward the 4 level. So I look and VIX is low, but then let's talk about VXN, which has moved around and has seen some action. Well, that's a much more meaty 14.3. Now, still relatively low to where VXN has been, but far more kind of, normal. And part of that's earnings. Speaking of earnings, we were Matt and I were looking at Microsoft right before the bell, and that's currently moving. I think Matt will have a thought or two on that. But until we see a good reason for volatility to actually not be low, a low vol begets low vol, and low movement begets more low movement.
Speaking of Matt, his fans already coming out of the woodwork. Good old Henry Schwartz there from Trade Alert. He usually lurks there in the chat. Today he says, Tubby's here. Awesome. I'm actually going to listen today. So there you go. Already getting some love there, Mr. Matt there in the live chat from all you buddies. But Mark alluded to, we got some big names popping off. I know you're not walking on the floor anymore, but I imagine, old habits die hard. It's hard to just walk away from it completely. So I'm sure you've been kind of keeping tabs on what's been going up, whether on the floor or upstairs or just in general. So what's been catching your eye these days now that you're off the floor a bit? And if you got any thoughts on the big names popping off today, we got eBay and Microsoft coming out after the bell. We had Netflix earlier this week, a lot of other big names. Anything catching your eye there as well?
The fact that people think Amazon's going to take over the world and how it keeps taking down these big box sectors retailers, and now you've got the home builders getting beat up pretty hard today. I'm just not buying that. These are stocks I'm definitely going to be looking at.
Yeah.
Near term, the big moves, Costco's and Home Depot today. You know, if I need to go build a shed, which I just did a month ago, I'm not ordering lumber from Amazon.
And can I just comment? The idea that Sears Holding is a threat to anyone is beyond laughable. That's just the move today in Home Depot and in Lowe's and to a lesser extent Best Buy was utterly ludicrous. And those names were just silliness that they were down, you know, at one point almost 5% in Home Depot. I looked at that and said, well, why don't I just buy the August 150, 55, 60 cauliflower for 70 cents? And that trade's already up nicely from kind of where I was looking at it. And it's just the move today was ridiculous. After hours right now, Matt and I, prior to this, were just talking about there was zero vol bid for Microsoft options ahead of earnings. They just came out and just crushed them. And let's see, the Straddle, with it closing 74 and a quarter, the Strangle was like...
It was like 265.
Like, about. 2.5?
Yeah, around 265, somewhere in that range. That's where it was.
Yeah, it's already up $1 and change. So, you know, that was that. We'll see where that one goes as time passes. I think as the call comes on, we could see some real movement there.
We'll get some movement. I'll get Uncle Mike here to give his 2 cents first, and then we'll get into all the big action. People are already voting in our poll. We just posted it about Microsoft and eBay. We'll get to that in a little bit too. Before we get to that, Uncle Mike, what caught your eye in today's activity, sir?
You know, like nothing, not too much in addition to what's already been said. Today was kind of a snoozer overall in the macro markets. One thing that is still catching my eye that we're not getting a lot of media news about is the biotechs. Biotechs had another move up today by 1%, or IBB is what I'm referring to anyway. I think that's something else with which we need to watch and talk about in the near future. We're going to continue to debate this healthcare scenario. It looks like right now in the Senate, it looks like the Republicans have 48 potential votes. There's 4 of them that are for. There's 4 Republican senators that are not on board with it. If they can sway a couple of those, that could play a factor in biotechs and healthcare going forward. Now, I don't think that's going to happen in the next couple of weeks, obviously. But I think that's something with which we're going to need to keep an eye on going forward, just to kind of add to what's already been said so far in the trading block.
Speaking of keeping an eye on things, Microsoft and eBay popping out here after the bell. We asked you guys right before the show, we said, hey, Microsoft and eBay up next on the earnings docket. They're pricing in about a 3.5% move for Microsoft, about a 7%. So a little aggressive there for eBay. We asked you guys straight up, what do you guys want to do? Do you want to buy that Microsoft Straddle for 3.5%? Do you want to sell it? Do you want to buy the eBay Straddle for 7%? Or do you want to sell it? Let's go around the horn real quick. Uncle Mike, we'll start with you. What do you think is winning our poll amongst those 4 choices?
I'll say buy it, and that's what I would say too if I had to pick.
Which one, Microsoft or eBay?
I'm sorry. I thought you said buy it or sell it. I'm sorry. I misunderstood. I would say Microsoft then.
Buy the Microsoft Straddle. Interesting. Mr. Meatball, same question for you, sir. What do you think is winning our poll? No cheating.
I'm not cheating. I would say sell Microsoft Straddle is winning the poll. There's a lot of people that just love, that don't even know what the Straddle should be priced, that just going, Microsoft never moves, I'm selling this. Well, that's what I think is probably happening.
It's hard to blame them because for like a decade, it was one of the best premium rights in the business. It never moved. And then over the last I'd say year and a half, that narrative has really flipped. Tubby, last but not least, sir, what do you think is winning our poll? Buying the Microsoft Straddle, selling it, or buying the eBay Straddle or selling it?
I'm going to go with buying the eBay Straddle because it's not one I looked at. and personally, before the show started, I hadn't seen the notes. And for fun, I just put on expiring tomorrow the 75, 72 and a half Strangle in Microsoft. It's a little bit cheaper than the 250 for the Straddle. I figured $150 was a decent throw at that. We'll see how that works out, but I would definitely expect to be that going higher today.
Mr. Tubby slinging here a little bit in the old softy. Right now, people are leaning your way, Matt, with 35% saying they want to buy that Microsoft Straddle. Close second, 31% saying buy the eBay Straddle. So premium buyers lurking in our audience. Who knew only 23% want to sell the Softy Straddle and 11% coming in saying they want to sell the eBay. So people may be a little nervous about what's cooking on in eBay. eBay closing today. It was trading about 37.20 earlier in the day. Let's see exactly where it closed here. Closed 37.15, so pretty much exactly where it was when we priced it up. The Straddle's right around 260, so right around 7% is what they were pricing in. And let's look here in the after hours. What we're getting so far, it seems like a little bit of a downside move, about 3/4 of a buck, certainly only about 2%, so certainly well shy of that initial behemoth of a straddle. Again, maybe as that call is digested a little bit, we'll see a little bit more of that shaken out. And same thing with Softy. They closed today, let's see, about 74.25. They were pricing in about 260, 265 or so right around 3.5%. And here in the after hours so far, they were looking up about a third of a handle, 74.5. So only about 1/3% out there, a little bit more. So not even 0.5%. Maybe selling both straddles was the way to go. We shall see. Speaking of movers and straddles and what was lighting it up earlier this week, it was crazy town out there in Netflix. Remember, we talked about them on the show on Monday, listeners. They closed right around 161.70. They were pricing in about a $13 straddle, so right around 8%. They opened up 14, almost 14.5 the very next morning, so we're already blowing through that straddle. As the day went on, the next trading session, they traded up as high as 185, so up about $23. So all in all, at least in starting the week, a good week to be buying some premium. Today, if this trend continues, perhaps the opposite is true. Our listeners didn't get it wrong on the Netflix, or did get it wrong, just on the Netflix either. A lot of them, the majority, 32%, or not majority, but highest number in the poll pretty much, except for sitting on their hands, saying $13, way too expensive, too rich for their blood. They didn't want to touch it. So in hindsight, not the right choice. About a little more than a third also saying they're going to sit this one out. So about 2/3 saying it was too expensive or they're just not going to touch it altogether. Only 20% saying just right. Only 12% saying it was way too cheap. They wanted to buy that bad boy. So if that was reflected in their trading, then perhaps not looking too good. I don't know, Tubby, does a day like Monday with Netflix and the crazy volume and the big move the next day, does that make you reminiscent, make you long at all for the old days of filling paper on earnings down there?
Oh, it's been so long since an earnings number meant anything on the trading floor. Just individual stocks. The only thing that got really exciting on the trading floor much was Spiders, VIX, SPX. There really wasn't much to it other than just watching it at the end of the day where the stocks would go. It's much more fun actually sitting here and getting a chance to trade it.
Yeah, the part that Tubby is now free of is the shackle of the 30-day holding period.
Right.
So try effectively trading with the 30-day holding period, folks.
You weren't trading earnings, that's for sure.
No, you were much more long-term than that. Well, I think you touched on something interesting, maybe our listeners will find pretty interesting as well, which is kind of how the floor and the options volume down there evolved over your time down there. Obviously, when you started, big names like IBM was the big equity pit back then, and they added all the multiple ones in the late 90s, early 2000s. And so you were filling paper probably in all those across the board. I remember you coming into Intel back in the day when I was out there and stuff. So you had range of run of the floor. And then in the recent years, that's really shifted to a handful of the big index and vol pits, obviously VIX, SPX, and a handful of others. Walk us through what a typical day was like in terms of paper back then. Like you were pretty much only fill in primarily, I would assume, VIX and SPX. And were you doing mostly those like we see out in SPX or VIX a lot, those short 1, long 2, long 3? Was that the primary paper you were filling out there? Walk us through what a day was like there for you towards the end.
Well, strategy-wise, it's kind of hard to say what we were trading, especially back in the day. But, you got to remember, back in the day, IBM used to report earnings at about 8:15 in the morning. So you'd come in and at 8:30, your position would be up or down $15 right off the bat. And there was no real time to digest news. Brokers just started coming in and hammering away on the traders. And also we had earnings that would break after 3 o'clock, but the options market would stay open until 3:10 back in those days. So you couldn't trade the stock, but you had to make positions in the options. So you might have a stock trading $30 and you're selling the expiry tomorrow, call it $10 because it might open there tomorrow morning. So that was definitely a weird time. But for us in the last several years, it was really kind of hard to see if people were taking direct positions in a pit. That's more just electronic flow. Very, very rarely did we see somebody putting on an earnings play directly in the pit.
Do you miss the old days of the earnings? You know, the earnings palooza. You'd come in the next morning and there'd be a flurry of paper. All the walk-ins would be lined up around whatever pit it was, and it would be just an explosion of activity. Versus maybe kind of the same old. You get some flurries of activity in the SPX and the VIX too, of course, but maybe a little bit of a different beast. Do you prefer one over the other?
SPX or VIX?
Just saying, like when you're filling the paper out there.
Sustained volume versus a big blip?
I mean, like the old days when you were filling a lot of paper around earnings and single name equities, and there was a certain vibe, a certain rhythm to that type of paper, and it was very exciting and action-packed versus maybe later on when you were kind of just filling regular paper out there in VIX and SPX, and you have your moments of intensity out there, obviously. But certainly in the last year or so, it hasn't really been rocking and rolling. Do you have a preference for one type of paper, I guess you can say, over the other?
Yeah, I mean, just the trend with trading particular stocks back in the, certainly back in the tech booms as a broker with your Intels and Amazons, stocks that would be moving $30, $40 at Yahoo, Qualcomm going up towards $700 a share. That was exciting times. You certainly don't want to see anybody get hurt, and that certainly happened to a lot of people, and probably more so the unfortunate public that had to be working at some of those places and watch, net worth that wasn't real go to zero from being a millionaire. But it was certainly exciting times, much better than the, something happens in the markets and we drop 300 points for no reason. Those are really difficult to broker because you're not really sure what's going on and how to step back or, jump in. I much prefer the old trending days.
Yeah, the other thing he was just telling me he misses right before the show, he said he misses sending Howard Gilman in at 2:58 to run over the entire crowd with a long calls right before the stock.
That was going to be
apart earnings. That's what he just said he misses.
That was going to be my next question. There is like obviously I had a few tire marks from those orders on my back at the end of the day. Everyone did. You knew sometimes walking in when it was that kind of order. Mark mentioned 258 and nothing's traded all day, and all of a sudden you got 10,000 slight out of the money calls to buy Lipton offers. You probably know something is up. Did you ever have one of those orders where you kind of felt bad afterwards because you knew you ran everybody over? You knew all the locals were hung on their stock. They didn't even get it. And then the next morning, of course, it opens up or down or whatever. And did you ever have any moments of regret looking back?
No.
I have
the hell with those guys. I love it.
Looking back on what he did to me. And every day, when he was still in the pit, when he was still on the floor, he was managing most of my trades. And I'm like, why am I giving this, after all the money this guy just ran over out of me, why am I sending him my brokerage? Then I remembered, oh, that's right, he was really good at running me over. Yeah. That's who I want filling my paper.
You want him to run over other people on your behalf. And it's part of the job. It is funny. We all have our tire marks on our back from those days. I seem to get it mostly from Ogre back in the day for whatever reason. Not so much Tubby, but I think they all took their turns leaving skid marks on the old pit. All right, let's keep on rolling. It's time for some. You mentioned some of the UA we're going to talk about. Let's get into it. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show we break down weird, wild, wonderful, head-scratching, all sorts of paper that's lighting it up out there in the options market today. We'll kick it off as we are wont to do these days. You guys still asking us all the time, are people trading these crazy, super far, super out of the money, call them catastrophe, call you what you will, garbage little Tesla puts? The answer is yes, they still are. The 2018 20s didn't trade today, but the 2019 50 puts, they did yet again, another 31 going up today. That's actually light. Usually they do a lot more than that. Total of 28,528 open on this strike. So these things continue to add OI day in, day out. A bit mystifying. We had some people actually write into us saying, hey, I am actually buying these. That's me. So it's been kind of interesting to talk to them and see what they're up to. Some of them listening to the show and going and buy them. Others have just been up to it and stumbled across us for whatever reason. So it's been interesting to see what some of their MOs are for buying these. But it does seem like it's small players for the most part coming in and deciding for whatever reason that's where they want to draw their line. That's where they want to take their shot. That 50 strike, or in some cases even the 20 strike, which maybe a little contrary to the news we saw today, talking about yet another grand adventure for Musk and company. But let's move on here. You guys are talking earlier about the drubbing a lot of these, let's say, home goods retailers were getting today. Home Depot was certainly on the receiving end of that today, off about 4%, or about 6.25%. 147, closing right around there, 147. Even not a great day for them at all. They've been averaging about 26,000 contracts a day. Today, doing about 6x that, nearly 120,000 contracts going up. Calls actually outnumbering puts a little bit, which is interesting given usually we see a lot of prints going up that are trying to get some short deltas on a day like this when the stock is just selling off aggressively. But Mark, this obviously alludes to what you were talking about earlier, the news coming out that Sears struck a deal with Amazon to sell some Kenmore products online. The first time they've allowed that. Sears obviously in dire financial straits. They'll take any lifeline they can get, and that means partnering with the enemy. If you can't beat them, join them. That's certainly what they're up to. Whether or not this is overdone, it's kind of interesting. Certainly the options paper didn't think it was overdone. In fact, the biggest trade we saw going up out there today, out there in Home Depot, were some weekly AUG 145 puts expiring on the 11th. So very near term. We saw about 1,500 of those going up in one big block. Paper just lifting the offer, getting those bad boys however they can get them, paying $205 for 1,500, a total of 1,900 going up on that strike throughout the day. OI is pretty much non-existent, only about 100 odd contracts. So opening paper, very near term, very near downside and short duration. These things are going out in not too long, August 11th. So not even a pure weekly AUG play, or monthly AUG play, I should say here. A lot of bullishness, or I should say bearishness here on Home Depot. Looking at the 1 year chart out here is interesting because Home Depot not that long ago was trading substantially lower. It's been feeling the upside love that a lot of the market has post November election here. Was trading right around 122 back during the election and peaking recently right around 160, about a month ago in late June. It's kind of been vacillating around these levels until today when this drubbing came upon them. Mark and Matt, you guys obviously were talking about this earlier. You obviously think this is a little bit overdone. What do you think about this drubbing in Home Depot and some other names like Lowe's, as well as people are feeling, at least from some of the options flow we saw today, people piling in to a lot of these puts out there today. So people are buying this downside move, at least for now. What are your thoughts there?
I think the downside has some room to go here. People are going to take some profits. All these stocks, you even go back and look at the Costco, which is down 17% in the last month and a half. But if you go back 6 months, year to date anyway, the stock is pretty much right here. So there's no sense not to take some profits if there's a little bit of fear. But I still think, here with Costco, you're almost down in 20% bear territory. That's probably getting close to a buy. Home Depot, you probably see some more downside, but I don't think it's long term.
Yeah. I mean, if you look, Home Depot found a pretty decent spot of support. Actually almost 3 months to the day, Home Depot shot up over call it a 8-day period from 147 back up to about 155. It's now right back to that 147 level. I like the bounce here. I think that if you look at the way the candle moved a little bit and the way they're pricing volatility, I would not want to own premium. You could talk me into selling some puts here. Like I said earlier, my preferred method, though, in this case ended up being some sort of bull butterfly. I think that's really where I found something I wanted to do. Lowe's, same thing. I just never like trading in the second banana. And Best Buy tangentially moved a little bit too. That type of appliance is not as big of a deal to them. But I think that this whole Amazon rules the world is ridiculous. And actually, I want to throw out an idea. So I'm gonna say a sentence about Alibaba that's not true, but I'm then going to replace it with true things about Amazon. All right. With the support of China, Alibaba is able to undercut prices through against all of its customers online. All right, now here's something that's true with Amazon. With the support of Amazon Web Services, Amazon is able to dump on the retail market. That's kind of the interesting thing. I think that there is a significant risk that Amazon Web Services gets broken up from Amazon itself, and this whole house of cards of Amazon as the retail that's going to rule the world falls apart because they have to start making money.
So you think they're going to pull the monopolistic factor? AWS is, shall we say, cornering the market on that side of the space, a less heralded side of the Amazon business. Obviously, everyone knows them for selling consumer products and things, but every now and then we see these big outages that knocks off a lot of the big names, the Twitters, the Netflix, and then, that's when people realize just how much of a grasp and how much reach AWS really has on the infrastructure, the backbone of the internet. So who knows? Perhaps you're right. We did see in the heydays of Microsoft in the late '90s them coming under the microscope of the government and threatening to break them up into various component parts. And then some people argue maybe that would have been better off for them in the long run if they did, but hindsight's always 20/20. And now you think maybe AWS could be next on the chopping block then?
Yeah, I mean, I just think that it maybe not, but I think if you look, is using a completely separate business that makes all kinds of money to then run everything you can at a loss. Borderline, if this was a company was headquartered in China, the U.S. would be after them for dumping. I mean, if this was steel, if this was a Chinese steel company, the U.S. would absolutely be after them for dumping.
Well, let's not forget, they don't do a very good job selling fresh food already.
No,
and how many times do I have to get a bad box of bananas? And well, you know what? I can go to the store.
Yeah, and really, and this is my argument with Whole Foods. This is why I don't think it's a good thing. The Whole Foods customer wants to pick out their steak and meats and cheeses because they think like they've got this organic eye and they're so smart. And in terms of meal kit, Blue Apron is the stupidest concept. There is maybe 3 cities in the U.S. where Blue Apron makes sense. And if Amazon getting into that, I don't know why they would. I think it's a waste of their time.
Well, people argue it opens up a lot of distribution for them and a lot of other things they could possibly do. And, of course, the Blue Apron business, such as it is, it's pretty much 90% shipping, and they do have that in their wheelhouse. So it seemed like a no-brainer when they announced their trademark recently to get into that business as well. But you're right, interesting stuff about the AWS. That might be something to watch because, again, it doesn't get a lot of front-page news. It's not really the consumer-facing side of Amazon. But if you do anything online, eventually you're going to encounter AWS in some way, shape, or form. And we managed to avoid it here for somehow, but who knows? Maybe that even will be coming to end in the near future. Moving on to some other activity we saw lighting it up today. Also out it wasn't all home builders and related names like that. There's some other names popping off, including XBI, the Spider S&P Biotech ETF. Say that about a few times fast. Closing today, $80.14, up about a little over 1%, about 1.3%. It's the name that does decent paper, about 24,000 contracts a day, doing about 80,000 and change. And this one was all sorts of funky. It seems like, at first blush, it seems like someone decided to maybe roll up some puts to a little bit more aggressive strike, and then they kind of fell in love with that strike and decided to buy some more and then finance it with a bunch of other trades. We saw in the morning paper doing the AUG 75.79 put vertical going up 12,500 times. Ton of open interest, about 14,000 on the 75s, not much on the 79. So it looks like they were rolling that, lifting the offer on the 79 puts hitting the bid on the 75 put. So it looks like a straight up roll there. And that was in the morning. And then hours later, paper came in once again on that 79 put strike. Looks like they wanted more, picking up another 10,000 or so, doing that for $1.65, buying the first kind for $1.93. So obviously the stock had been rallying, those are a little bit cheaper. And then they turned around and sold, looks like, or near to it, the AUG 85s for 70 cents, opening there 10,000 times, selling the AUG 73 puts also 10,000 times for 40 cents. And then turning around and also dumping out maybe a little bit of a ratio here, because they got the calls and the ratio vertical, also selling, buying this time, the AUG 74s for 660, right near the ask there. Looks like probably buying those. Open interest is pretty decent on that strike, so it could be potentially closing there. But a lot of funky paper going up out here, but it looks like at first blush that potentially someone falling in love with those 79 puts and wanting to finance them with a lot of stuff, and then also turning around, maybe an underlying holder looking to sell some of those AUG 85s, and also buying a vertical 1x2, buying one of the 74s in July. Those could have been closing though, given the fact that it's a different month and a size OI out there. All sorts of funky multi-leg paper going up out here. Looking back at a recent 1-year chart here of good old XBI. This thing has flirted with some lows down as low as almost about $52 or very close to it. It's like 53 and change. And then rallied high. Pretty much we're floating around the highs right now. That's of $80 and change. So we're hovering at these highs, which makes this roll up even more interesting. Mr. Sebastian, obviously a lot of legs to dissect here. A very funky trade, but it seems like probably a long underlying holder wants himself some 79 puts, wants to tighten up his protection from the 75 to the 79 strike, and is not willing to blast out, or is not, I should say, not reticent to blast out some other strikes in order to finance that.
XBI has been off to the races. It's been one of the major beneficiaries of kind of what's going on around Obamacare. They're actually in a win-win situation where the legislation seems like it's going to be really positive for the biotechs if it goes through, and the current situation is also pretty positive for biotech. So I think we're getting some clarity that, is there a chance that some of the insurance companies and hospitals are losers if Obamacare falls apart? Yes. Is it going to be the drug companies and the biotechs? No. If anything, the FDA is getting more aggressive and going to be pushing for more of their stuff to be able to develop quicker, and more breakthrough drugs to be pushed out. I think a lot of people think the FDA has been one of the most dysfunctional agencies. I mean, being the most dysfunctional agency in the United States government, that is saying something. And that tells you how bad the FDA has been over the last 10, 15 years. And I think one of the things we are seeing out of it is that if there's one thing that the Trump administration is maybe getting right, is that they're pushing for breakthrough drugs to get out. Most notably, cystic fibrosis. I mean, the fact that there's going to be a drug that touches 90% of cystic fibrosis patients, I think is, it just warms my heart in that, my best friend when I was a little kid had basically succumbed to it, and now we're in a position where, with the help of a more efficient FDA, we're going to be able to get a lot more done. So that's exciting to me.
I'd like to add something to that. With that, my son has a nut allergy, and I ranted on this show about a year ago about the EpiPen being priced at $6,000 or $600. Thankfully we're blessed with very good insurance, but so that really doesn't affect us. But there's a lot of people out there that don't have that. Recently, AviQ came back, and that's like a pocket-sized EpiPen type of thing. So it's basically something that is much more efficient in terms of carrying than EpiPen. And so my wife went to the store and said, okay, well, does our insurance cover it yet? They're like, oh, we're not sure. And she said, well, just out of curiosity, how much would this cost if we just paid cash for it? Because it is a lot more convenient. It actually talks to you and tells you where to stick the needle if you're having an anaphylactic reaction. And it cost $5,000. Now, I think that's ridiculous, and obviously we're not going to get that. But for the time being, I think it just shows how ridiculous things have gotten, and I'm all for less regulation in things like that.
Yeah, that's more of, I mean, one of the things that does absolutely need to get fixed is the way the insurance markets operate. They're ridiculous. And the way the drug markets operate, the way we incentivize. Actually, one of my clients was just sold a drug company. Basically said that one of the things that is really negative is the the way drug companies develop, then get bought, and it stops innovation. Drug companies only come out with one drug a year. And I'm not going to say this is, but they basically said Pfizer is where drug innovation goes to die. And that's kind of an interesting thing. And I agree with you, Mike. On one hand, the crazy prices are, our system is screwed up. And the idea that we want to keep, there's a group that wants to keep things as is kind of shocking. But on the other hand, having our system, we basically finance innovation for the whole world by us overpaying for drugs. And, it's not an easy answer.
The last thing I'd add to that, I've been calling that kind of my Trump trade as well, buying these pharmaceuticals, what's going to get passed, less regulation. I don't know that means prices are going to come down because the Trump's team has already let us know that they want to make sure that the rich get richer for the time being here, and that doesn't necessarily mean that because new drugs hit the market, competition is going to make these cheaper. But I think from the standpoint of trading options or trading stocks, you're certainly in a better spot buying those today than you were buying Denadron 10 years ago.
Oh, Denadron! Wow, I forgot about that thing.
Old school names. Old school names. I like it. Good old. Was it Denadron or Dendron? I forgot which way it was pronounced. Either way, it was Crazy Town. Speaking of Crazy Town, it's Thursday. That means it's time for Uncle Mike to come on down from Crazy Town, a.k.a. St. Charles, and dispense some options, wit, and or wisdom. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, this is always a scary part of the week for me because I'm tossing it over to Uncle Mike, and I have literally no idea what the heck he's going to talk about. He could talk about buying wings, getting some nice lemonade at Skippy Zeros and Lemonade, or perhaps demystify some options mysteries for us. Uncle Mike, maybe we'll get you a nice trench coat and have you have the options unsolved mysteries. What do you think?
That sounds like a good idea. The option block man of mystery, Uncle Mike Tosaw. How's that sound?
I'm not sure how well the trench coat will play on the radio, but we'll all know it's there and it'll be good nonetheless.
Hey, the Viceroy had his fedora. I can have my trench coat, I guess.
I guess.
And a trench coat and bubble pipe. So we'll go with that. What I want to go through today is the call roll. And I know this one's kind of basic for today, but I want to keep it that way because I think this is very important in a market like this. Right now, if you're a market bull, like I'm guessing a lot of people are since the market's been going up, whether you're bullish or bearish, this would work with puts as well. We've had rather, in terms of like overall movement, we haven't gone in very large amounts of movement in the market as a whole recently. So let's say that you're just long a call option at this point. And if you're long a call option, that's fine. But this could also apply to a vertical, to some extent, a horizontal or a diagonal. But for the most part, this would address call verticals as well as just single long calls. Same would hold true for puts. Roll it out. And the reason I say that is because we have very low implied volatility right now. Now, of course, we know that low is just based upon what your perception of it is. If you believe the VIX is going to go to 4, then obviously we have very high implied volatility right now. But historically speaking, we're on the low side. There's no one that's going to deny that. Now, what does that do if you roll out a long option? Well, number one, it obviously buys you more time. Now, of course, the bad part about that is that as you're doing that, you're thinking, I got to pay more money for this. And that's sometimes hard to do when you are a long premium trader. You want to do, typically when you're long premium in some way, shape, or form, you don't want to pay a lot of money. You're hoping the underlying moves a lot and you can make a nice substantial 90 to 100% profit or 400% or whatever you're looking for. But I want to add something to this, is that if you're continually bullish and or bearish for that matter, and recently we have not had a lot of market movement on the overall market. Of course, there's some stocks that have moved a lot. We've had a tech rally over the last few weeks. The SPY has come up a little bit, but I wouldn't say a ton. But where I'm going with this is that, when I get into a trade, I often like to ask myself, okay, at what point am I wrong based upon the underlying? So let's say that I'm just buying a call. Well, as soon as the stock goes down this amount, I'm wrong. I need to get out of it. Now, the other thing with which I'll always ask myself is, at what point am I wrong based on time? Meaning, if this isn't quite moving at all, and I'm long premium, eventually this is going to start to get pretty costly with data working against me. And, of course, there's ways with which you can remedy that with doing spreads, diagonals, horizontals, things like that, which we talk about all the time. But let's say you're either in a vertical spread or just long a call option. I think right now is a pretty decent time to roll out. Let's say that you're long some October calls, and you know that the closer you get to expiration, the more time decay is going to have an effect against you. Well, if that's the case, then what you may want to start looking to do for those October calls, or even September calls, whatever the case may be, roll them out a couple months. If you have not gotten the movement that you have wanted right now, because of the fact that we're at lower implied volatility, it's not a bad idea to roll them out and buy some more time. Just because of the fact that it's not going to be very costly and it will give you more time. Now, of course, the disadvantage of that is that the second that you do that, maybe the markets will go up the next day and you're thinking, I could have gotten more deltas by just, or better gamma by just staying more near term. Well, that's fine, but the trade's still going your way. So what I'd like to emphasize for today, if you're trading verticals, if you are trading single leg options, whether they're calls or puts for that matter, roll out. We've never really talked about the art of the roll that much on this show, but today I want to go through rolling out. And for a future strategy block, we will be discussing rolling up and rolling diagonal at some point. And that is the strategy block for today. And I am going to fade away with my trench coat.
I like it. Fade away into the fog, sir, laughing maniacally. All right, that's going to do it for the strategy block. We got a couple of minutes. Let's see if we can squeeze in a couple of questions from you guys. It's time for a quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, I won't go through the list of ways you can hit us up because it's too late for this show. By the way, you already got a bunch of questions in here. Let's go to this one. This one, Mark, you went on the show Monday, I believe. We had Roger Barone write in talking. We were talking about those VIX, those VIX verticals out there and some of those trades out there. And he wrote in to say that IB had a bunch of crazy fees that they attach to VIX, even for straight up verticals that have no naked short legs or anything like that. And he was, complaining about that. We haven't had a chance, by the way, to follow up with them and see exactly what those fees are and why they would use them, when and if they would use them. Would they do it on a straight up vertical like he was complaining about, or like a long vertical, or would they do it in some other ways where there's more, naked exposure for the firm and they would maybe charge some margin there. So we're going to try to figure that out. In the meantime, he followed up and said, please advocate for all Americans to be able to trade foreign equity or index options. Trying to get the SEC or Financial Services Committee to do the right thing is like talking to a wall. They are both controlled by the big banks and QIBs whose money they protect. Insane, archaic policy pushing Americans and their money offshore. And he puts a link to something he's written on it. He calls it the Option Project. And he says this. He ends it with this. He says, if I'm going to try to change it from the inside, if all else fails, and he puts a link to Barone for Congress. So apparently he may be running for Congress with perhaps his one talking point being opening up foreign equity and index options and also getting rid of the VIX fees. I'm not sure if that's going to resonate with the heartland, but still interesting stuff. I don't know, Matt, or Mike, we'll start with you. You actually do some stuff with IB. What do you have to say about those fees? Do you have any insight into that and when they would charge those? And also, if you got any thoughts on his advocating for us being able to trade foreign equity or index options, have at it, sir. And also, are you going to vote for him? Are you going to vote for him for Congress?
Well, I need to know where he stands on the EpiPen issue first. But anyway, the way with which IB works with their fees. First off, let's talk about the commission fees. Every exchange has exchange fees on their options. Now, if you're trading an option on Microsoft, SPY, usually it's 5 or 6 pennies, and the broker just pays that. Sometimes it's more, sometimes it's less. If it's VIX or SPX, it's 41 cents. And IB's commission structure is you pay them a commission plus the exchange fee. That's just how they do it. And with VIX, I believe it's 41 cents these days. And their VIX and SPX are just notorious for having very high exchange fees.
Yeah, the exchange fee varies based on the value of the option, and it can be anywhere from 22, I think, to as high as 50 something. The fee on a VIX contract. What's the?
I thought it was 48 cents.
Yeah, it can get as high as 48. That's right.
Okay, got it. And then the other part.
There's some craziness. Now, here's the good news though. If you can do more than 10,000 on one ticket, if you can do more than 10,000 on one ticket, the SIBO stops charging you. Here's another thing. The SIBO has their frequent trader program. So if you're willing to trade at least 5,000 contracts a month, you can get a 5% all the way up to a 15% rebate on your fees from the CBOE.
Which will save you a whopping 7 cents.
Which will save you, 15% on 48 cents is 7 cents. Yeah.
It can be.
7 cents is 7 cents.
Right.
All right? You do enough, it adds up.
It's a teeny.
So. That's true. And then the other fee that the listeners is asking about is an exposure fee that IB has added. Recently, I've actually moved a client with several $1 million out of IB just for this reason. Just to give you an idea of it, if you are actually in a covered call, it's the same thing as in a cash secured put. And so if you're in a covered call, and let's say that you're leveraging yourself as much as you can, you're going to pay margin interest. Whereas if you're in a short put, you're not. That's just the way that brokers work. So you don't have to pay the margin interest. Same trade, same everything, same leverage, whatever way you want to put it, there's no margin interest. Well, IB didn't like that apparently, so they started charging what they call exposure fees, which is just a way for them to make money charging margin on a synthetic. And so with the VIX, they probably, the client I had.
It's utterly ridiculous.
It is. I think it's horrible that they're doing it. And there's millions of dollars of my client money just left IB for another broker just because of that exact reason.
They got to make up for all the Timber Hill revenue they're not making anymore.
There you go. So with that, if they're going to do something on VIX, they probably have some type of calculation. But the oversimplified answer for those exposure fees that IB has is because it's another way with which they can charge margin interest on a trade that traditionally would not charge margin interest. So that's where that is.
Interesting stuff. I was trying to find his original question, which had a link to the IB site, which explained the fees in a little bit more detail. I can't find it right now, but we'll see. Maybe we'll have a chance to vote for him for Congress, and then we too can weigh in on this all-important issue. Let us know your thoughts, listeners, on these and a whole bunch of other stuff. I know you guys like to do that. We got to keep on rolling, though. Into our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do a quick update on our two friends who were popping off after the bell. We had eBay pricing in about 7%, Microsoft pricing in about 3.5%, and eBay looked like they were flirting with that. They were off about 6%, a little more than that at one point. Now it seems to have rallied back a little bit. It's only off about 2.25% here in the after hours trading, not quite shy a buck. So maybe some of that downside overdone here earlier in the show. And good old Softy also only up about not even 2%, about 1.8%. So both of them, at least so far, not quite breaking the bounds of their premium. We shall see if that holds up tomorrow. Who knows? Maybe this will be like an old school old school Microsoft announcement where it's a bit of a meh and all that premium writers go home happy. We shall see. Meanwhile, though, let's turn our attention to what's coming down the pike for the rest of the week into the weekend. Mr. Tubby, you are our guest. You get pride of place, sir. What, if anything, are you watching for the rest of the week or maybe the coming weeks? Are there any earnings that are really on your docket? You obviously got your Microsoft strangle, so you'll be watching that. But what else is on your radar for the rest of this week into the weekend, sir?
I'll be looking at Apple next week. I think the stock's made a nice move from 142 or 141-ish. It's come back to just over 150. I think the high it hit pre-earnings, a report that was like 155. So I think on Monday you guys were talking about buying calls into earnings and dumping before the earnings. I think Apple would be a perfect example of probably doing that. I'm along a little bit of a call spread in there right now. I may look to roll that out if we do get up to 155, 160 before earnings. But that's about all. That's about all I'm looking at the moment.
And Mr. Meatball, same question for you, sir. What is catching your eye out there?
Are we going to have 7 more days of, a 7th day of sub 10 VIX? My guess is yes. Also watching oil. Oil had a nice little run up. It's reversed. I'm also watching the auto parts dealers, which look terrible. Continue to look terrible. So that's the piece that I'm kind of watching.
And last but not least, Uncle Mike, what is catching your eye for the rest of the week into the weekend, sir?
Well, I want to be able to say my trademark thing on the show next week. I wasn't able to say it today. The markets were down slightly. So hopefully I'll get to say it on the show on Monday. Also watching Apple, just with it coming into the earnings as it is, I think that'll be a nice one to watch just with where it's at right now. So that, tech in general, and let's see if we can make some new all-time highs.
All right, everybody. That music means we've come to the end of a fun journey. Mixing it up a little bit here on the old option block today, which is always fun. But before we go, one last time around the horn, starting with our guest, Mr. Tubby. If people are listening, and I'm sure a lot of people out there know who you are and how to reach out to you, but if they're listening and they're saying, I would like to avail myself of that man's decades of options expertise, what should they do, sure? Where should they go? How should they track you down?
You can find me on Twitter at SoxFanMattB. That's a White Sox fan, not a Cubs fan.
Or a Red Sox fan.
Or if you do have questions, you can reach me by email, 1906tubby@gmail.com. And that 1906 is in reference to the White Sox beating the Cubs in the World Series.
Oh, see, I assumed that was in reference to when you were born.
There we go. All the love over there as you guys are knocking over bottles and cans left and right. Having a good time over. I'll have to get you in the studio next time so you can have some of those beverages in here. That said, Mr. Meatball, what's cooking in the land of Option Pit and Carmen Line, sir?
Yeah, hey, next, so we had a scheduling conflict, so our seminar, Straddle, Strangles, Long Gamma, VXX, and UVXY is going to be Saturday the 29th. Go to optionpit.com/long gamma to sign up. Use code 25_OFF, all capitals, and take an extra $25 off.
There you go. A good deal at any price, let alone with $25 off. Optionpit.com to learn more. And last but not least, Uncle Mike, when you're not dodging exposure fees and everything else, what's cooking in the land of RCM Wealth Advisors? And indeed, how goes the war on ticket charges?
Well, it's not just war on ticket charges. It's war to make things right for the client. I forgot about the IB exposure fee. We literally moved, I think about $6 million out of IB to another broker because it was what was best for the client in that situation. So with that, I will help you out. I can help you to get a better fee on ticket charges, most likely. If you're a self-directed trader, give me a call, see if you qualify. 312-212-3531 or shoot me an email at mtosaw@rcmfs.com. And as if life could not get any better, you become a client of mine, all those great deals that Sebastian just talked about, I'll throw in a $100 gift card to the Option Pit.
Oh, I love it.
The deals just keep on coming. Hit the man up. M. Tosaw at RCMFS. Let him roll your puts for you so you can sleep at night. Let him fight the war on exchange fees, or I should say ticket charges and exposure fees, so you don't have to. Let Uncle Mike do all that for you. Hit him up, M. Tosaw at RCMFS.com to learn more. On behalf of Uncle Mike, and the Meatball, and even Mr. Tubby, who comes pre-equipped with his own nickname, makes my life a lot easier, and indeed myself. I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. Of course, we're streaming live. We love you guys too, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.